Let's get across more of what we are expecting in the local session. Chris Conway from the Australian Stock Report is joining us live from Melbourne. Chris, great to see you there this morning and do appreciate your time. Look, a pretty flat session that we saw on Wall Street overnight. What do you think we're in for in our session today?
Good morning, Leanne. Look, I'm hoping for a positive session today, and that's of course based on the fact that SPI futures are pointing to some pretty solid gains, certainly more solid than what we saw in the US. I think that will be commodity linked, commodity driven. Of course, oil bounced off the 50 region overnight. Gold was a little bit firmer, and as you said in the rundown, base metals firmed as well. So I think our market can hopefully do a little bit better than what we saw in the US, but the broader theme and the overarching theme is definitely one of waiting. You know, investors and traders are really waiting for a couple of key things, mostly out of the US. Obviously, the jobs report on Friday, earnings season soon to kick off, to see if, you know, company earnings can match and that we've seen in the US recently. And then, of course, you throw into the mix Trump, as always, and his tweets and everything else that he's doing in his policy direction, and so on and so forth. So hoping for a positive session today, but I think the broader theme, as I said, is one of just let's wait and see at the moment.
So where do you think we are heading from here on the broader index level? Chris, we've often spoken to you about that key 6,000 mark, and it seems like we're just kind of bumping our head. Every time we try and get up to that level, we seem to drop back again. Where do you think we are going from here? I mean, realistically, can we get to 6,000?
Look, as Leanne, as you know, I've been a bull and somewhat of a raging bull for some time now, but I'm a little bit more circumspect at the moment, and that's because of the amount of energy that we've exhausted getting to where we are. And as you say, we did get within shouting distance of 6,000, but we haven't actually seen the print yet. So I would say, for me personally, I'm paring back a little bit on my immediate bullish expectations. But ultimately, I still think we get to 6,000, and by the end of the year, I think we get beyond that. So I think, again, right now the environment is one where the market has run quite hard, and we're really waiting for the next catalyst to see if we can break higher, hit 6,000 and go beyond. But for me, it all comes back to the growth story in the US. And whether or not that's supported by Trump policies, I think the US economy is doing quite well. It's going to be able to support further interest rate rises, and I think markets there will press higher, and that will carry our market along with it. So immediately, there's not too much going on, but I think 6 months out, you know, we definitely clear that 6,000 level, hopefully 6,200 by the end of the year.
Okay, in terms of catalysts and in terms of everyone watching and, you know, holding on interest rate hikes, Friday's jobs report is going to be really crucial. Upcoming reporting season as well, because we need to sort of justify where we've been going in the market. Could either of these events sort of throw things off course for the market and potentially for the Federal Reserve?
Look, I think in terms of the jobs report on Friday, it would have to be a particularly bad read to alter the course that the Fed has laid out. And in reality, I don't think that we get that. I mean, it would really have to, the jobs number would have to miss hugely to alter you know, the course of the US economy and the course of the Fed's thinking in terms of how quickly they will raise interest rates. So I don't think there's a great deal of risk there. As for earnings season and its impact on the Fed, yeah, it could have a more significant impact, but again, it's only if it misses hugely in terms of what people are expecting. So just listening again to the rundown there, one of the analysts in the US was talking about, you know, sort of double-digit earnings growth. I don't think it quite needs to be that extreme to support the market and where it's going. People need to believe that it might get there, but I don't think it has to hit that this time around. But certainly it needs to be an improvement on the last US earnings season, which was a relatively good one, especially when considered to the 5 or 6 quarters that preceded it. So, you know, it needs to build on the momentum that was created last time. And once again, if there is a significant miss or earnings missed by a lot, you know, then that's the thing that could derail it. But I personally don't think that will happen.
Yeah, okay, all right, and if it is good, maybe the catalyst to sort of drive things higher from here. So we'll just have to wait and watch as earnings season does continue. Now let's talk commodities, because we did see in the overnight session oil prices rising, base metals rising, so that's setting us up hopefully for a positive session for our mining stocks there today. What is your view, I guess, more broadly on the commodities complex and whether this recent run, you know, this solid run can continue?
Well, it depends on which commodity we're talking about, Leanne. I'm certainly more bullish on oil and sort of have been all the way through, the recent slide that I think took it down to 48. So I think, at least from a technical perspective, I think the reclaiming of 50 is important. We saw a nice bounce off that region overnight, and I think we can move back to the sort of $54, $50 peaks that we were at a month or so ago. I think the OPEC deal can and will hold up. And I think there's too much on the line for a player such as Saudi Arabia to allow oil prices to fall, significantly, lower than what they were just about 10 sessions ago. So oil I actually quite like, and in particular I like the Australian oilers because they've been fairly resilient. They didn't get crushed through that recent down move. I think the market knows that there's some support there in the oil market, so they actually held up pretty well. So just from a stock level, I like the Aussie Oilers. Looking at some of the other commodities, gold's at a really important tipping point. It needs to clear about 1260, 1265 in order to have that next leg up and hopefully a run into the 1300 region. If it can clear that resistance, well, then obviously gold miners become even more attractive. Iron ore, it's a difficult one to get a read on at the moment. As we know, daily iron ore futures are out, and the market takes, iron ore plays take a lot of lead from what's going on in those iron ore futures, but again, seems to be fairly well supported. So, can the solid run continue? I think commodity prices will remain well supported, but I think there's only certain commodities that enjoy further significant upside. I would say gold would be one of them, and I would say oil would probably be the other.
Okay. You mentioned the Aussie Oilers. Are you running your eye across any of them in particular at the moment, Chris?
Yeah, I am, and of course, Leanne, as you know, I come from more of a short to medium term trading perspective, so always important to state that when I'm talking about stocks and outlook. So Woodside I like, again, because it has, as I said, been very resilient. Probably needs to clear about the 3260 region and sort of move into some clean air in order for me to be a buyer. The other one that I don't mind the look of, if it gets a little bit cheaper, is probably Santos. I think that's almost an automatic sort of 320 to 350 region. I know that's a fairly broad range, it's about 10%, but if it trades down in there, I like that one as well. So they're the two that I would be looking at. Oil search doesn't really appeal to me at the moment. It's sort of stuck in no man's land. Yeah,
okay. What about coal prices? Because we've been talking a lot about coal with the disruptions there post Cyclone Debbie. Given that you are a short-term trader or investor, I mean, would you be looking to take advantage, say, of the shorter-term surge in the coal price?
Yeah, absolutely. So I sort of lucked out a couple of sessions ago, Leanne. On Monday, I put a buyout on Whitehaven Coal, and obviously had a pretty good session yesterday. I won't pretend to know that, I knew that it was going to jump that much. I like the look of it. I like the prospects for it, and got that nice bump that we saw yesterday. But yes, in terms of short-term trading opportunities, and in this case, probably very short-term trading opportunities, I think the damage that Cyclone Debbie has caused and the impact that it's going to have on coal prices lends itself to buying a Whitehaven or a South 32 right now, enjoying a run for a couple of days up to a week. Hopefully you can squeeze 5% out of it, and then closing that trade and moving to the sidelines. So in short answer to your question, yes, I would be a buyer of those stocks.
What else? What else are you looking at? Anything that's sort of looking quite strong technically?
Yeah, so just as an exercise on the show this morning, I had a look at all the charts in the top 50, and there's not really a great deal going on at the moment, and that sort of lends itself to what I was talking about before in terms of the market sort of being in a holding pattern, waiting to see what is going to happen next. There were a few that caught my eye. Woolworths, for one, looks very strong technically. Goodman Group was another. So there are some, good technical opportunities, I think, in the top 50 at the very least. But I guess the opportunities I would say for me right now are few and far between. And again, as I said, that feeds into that broader theme of, everyone just sort of waiting to see what happens at the moment, waiting to see what happens in the US, waiting to see what happens with Trump after what has been a fairly exhaustive run higher. I think the bulls, rightly so, are probably a little bit tired at the moment, need to regroup, need to churn at the top here, and then need to take some direction probably from some macro events.
All right. Fantastic, Chris Conway. We'll leave it there, but as always, it's been wonderful having you on the program. Thank you so much.
Thanks very much, Leanne. Cheers.